Okay, income tax problems, really important diagram here. You just have to know how to do this and just remember this diagram. The diagram has a box for gross pay. It has a box here that calculates 20% times the gross to cut off pay. We'll do an example in a minute. Has a box here that contains whatever the higher rate percentage is, like 41% of cross gross pay minus the cut-off level. You add these two and you'll get the gross tax. You'll take the tax credits from that and that'll give you the tax payable or the income tax payable, whatever you want to call it. And if you put the gross pay in here as well and take the tax payable from that, you get the person's net pay. Really important diagram that we'll have done in class anyway. Okay, but you need to know how to use it and you're home and dry. Okay, page 56. A woman's income for the year is 45,000. She has a standard cut-off point of 28,000. Okay, so and a tax credit of 4,000, so that'll just go in there. If the standard rate income tax is 20%, so you're going to get 20% of the standard cut-off point, and that's going to be 5600. And the higher rate is 41, so you're going to get 41% of her 45 minus 28, and that's going to be 6970. How much income tax does she pay for the year? Well, you'll add these two guys to get the gross tax. You'll take away her tax credits, which is 4,000, and what we'll do then, and basically her income tax payable is this minus this. That's the answer. And just out of interest, if you did put her gross pay there and you took the tax payable, that's her net pay. That's what she takes home at the end of the year. Okay, let's talk about Universal Social Charge, USC. So USC has rates, okay, and they're based on how much money a person earns. So, and the rates are given and calculated either per year or per week, because some people might just work on a weekly basis in the summer or whatever, okay? So per year, a person will be charged 2% of up to 10,036 euros of his salary. So if a person earns 9,000 a year, then they'll have to pay 2% of that in USC. If they earn more than 10,0036, then they'll pay 2% up to that level, and they'll pay 4% on anything they earn between here and 16,016. Okay. Now, if they're earning more than 16,016, then they'll pay 2% of this level, 4% of between here and here, okay, and then they'll pay 7% on the remainder that's greater in their salary than 16,016. We'll do an example in a second, okay? But if it's a weekly wage, then they'll pay 2% of 193, 4% of this, and if they're earning more than 308, an extra 7% on whatever else that's greater than 308. So a person earning 20,000 euros a year will pay 2% of the first threshold, then they'll pay 4% of this value here, whatever this is in here, and then they'll pay 7% on whatever the difference is between what they're earning and this final level here, okay? And then if we talk about PRSI, then that's pay-related social insurance. It's about 4% generally, and is 4%, and the government take that off us so that we can pay for pensions for people who've retired and other bits and pieces, okay? So here's an example. Connor has a weekly wage of 840 euros. So we're going to use the weekly tariffs, okay? He pays USC and he pays USC at these values here and PRSI at 4%. Has a tax credit of 65 and pays income tax at standard rate of 20%. What does he take home in his wage packet? Okay. All right, we're not going to use the big diamond for this. We'll just work it as the USC. He'll pay 2% up to 193 euros. That's from the table here. He'll pay 4% on whatever this difference here, and he earns more than 388, so he'll have to pay a further 7% on the difference between 388 and what he earns, 840. And that gives us 4570. It's in the book. You can look it up and clear it for yourself or whatever. Okay. PRSI then is just 4% straight of 840, his weekly wage, that's 33.60. The income tax is equal to his gross tax minus his tax credit. Now, he pays 20% tax on 840 at 65, okay, and 65 euros, and so his income tax is, oh sorry, I misread that, it'll be 840, 20%, sorry, of 840 minus his tax credit, sorry about that, so he pays 103 income tax. So his total deductions are his USC, his PRSI, and his income tax. So he's paying out 182.30. So his take home must be 840 minus that, 657 euros and 70 cents.